Hey everybody, it is Mark Coe for Friday, 6th of October. I want to take a look at a couple markets today and follow up on the crude oil that we were looking at last night. So last night in the video, I mentioned this level 50.70, and I'll show you what I was looking at and what oil eventually ended up doing. So oil had broken out on Thursday to some top edge bullish action, and what I said when I recorded the video last night is that we're sitting right at this level, this 50.70 area. And then this was pull back into this, right? So this is what the screens looked like last night. We were right into that section. What I said was leaning against that was a good spot to lean against for long trade. What developed in the short term was that it gave way from this level, and it did so in early Europe today, Friday, the 6th of October. But what's so clear about the level is once that level gives way, you're not correct in the trade. So it still leaves you good risk reward. So the idea being this: if you're looking at crude oil in a short term, that was a bullish break. It just couldn't sustain it. When you back up and look at crude oil on a bit of a longer term, you will see that the bullish side was never overly powerful. On a longer term level, you're still able to see crude oil was capped topside. So there's kind of the difference between looking at a very short-term picture, which had, again, 50-60 area measured as the bullish level to lean against. And once that gave way, having to come back and focus and say, okay, bigger picture, what do we really see in crude oil here? So crude oil gives way, and here's just a longer term look. So I went from a 30-minute to a 4-hour chart, and here's what I talk about in levels. This was the last consolidation area that crude broke lower from. You can see yesterday, even as it got that little bullish break above 50.5, it never challenged that. And so it's always important to keep a longer term aspect in mind looking at these levels. Now I want to look quickly at euro dollar and Aussie from today. So as we walked into the US morning, as we walked into non-farm payroll, dollar was sitting top edge. Dollar index was sitting on top edge highs. You saw the dollar strength everywhere. Well, typically when you see a market really pricing in all that bullishness, it doesn't take a lot to kind of see a reversal or a disappointment. So you had to think about it like this. If the dollar were going to benefit for the rest of the day and finish out the week really strong, it was going to be bought from already extreme levels. So you had euro below 117, right? So this is on non-farm payroll release. You have euro sitting below 117. You have dollar yen sitting above 113. You have Aussie sitting below 77. I'm sorry, below 78. And so all this is going on at the 8:30 release. Now here's what's interesting when you look at Aussie dollar. Now if you go back and look at Aussie, and you have to go look at a longer term time frame, always in my charts you have to do that. 77.50, if you will look at a weekly chart, is a big key pivotal level. And so what's interesting, when you take that same area, the same 77.50 area in mind, look what happens on an intraday basis. So you get a test of 77.50 overnight, right? It holds, trades back in front of non-farm. But after non-farm release, you break your 77.50. And so what this really serves to do, especially for the short-term trader, and this really sucks them in and really places a nice little trap. What does the market start thinking, or at least the short-term mind starts to think? As you pull down below 77.5, you're trading 77.35. As a short-termer, you're sitting there focused going, oh, we're going lower, we're moving lower, it's strong dollar, the dollar's being bought. And then you watch the market promptly reverse. Well, what ends up happening here is in a bigger picture level, you're still maintaining that support. And all that happens on that 8:30 release is that you serve to reverse the market in a sense that you suck in the sellers and then quickly reverse the other direction. And you saw that across markets today, whether it be euro dollar, dollar yen, Aussie dollar. So looking at that, what I think you need to focus on is bigger picture stuff. Euro, and this level has been talked about for weeks. Euro on a bigger picture was in a zone, 1677 to 1720. That was the big picture zone. So let's look at that 1677 to 1720 as it unfolded today on the shorter term, right? So here's your 1720. There's your 1677, right? So that was the bigger zone identified on longer term charts. That's the zone. Now look what happens within the zone, right? Within your box of support. You get this basing level, all of it right around 1690, 1690. And then what happens at the 8:30 release? The market trades lower. What is that going to end up doing? Anybody that's short-term, weak, long holders or stops are going to be done, only to watch the market reverse. So when you take this same level and understand what's going on, the implications of it, and look at a bigger term, it's not so surprising to see why that held. This is that level. This is that 1677 to 1720 level, all formed in late July, mid-August. It wasn't formed today. And you would know that if you would do your work on a longer term. So my point is to really look at it from a bigger picture perspective. Once you have those levels identified, then come dial it down to that shorter term and find your level within the level. But you're dealing from a much stronger position when you will look at those trades in that bigger picture time frame. So it's been a nice week. We started the challenge this week for my quest to 50K over the next year. Hope you guys will join us and following along. We did finish the week positive, not largely positive, but off to a decent start, and we'll look to add to that next week. So for the 6th of October, hope everybody has a great weekend. We'll talk to you next week. Cheers.